Hey guys, it's Jason with Hard Money Bankers with your Private Money Minute. Today I want to talk about insurance. I understand it is not a sexy topic at all, but it's probably one of the most important things that you need to make sure you know a little bit about so you have the right policy in case something happens. I'm not an insurance agent, so check with yours for the right policy for your situation. But after doing over 1,000 deals through Hard Money Bankers and also owning about 100 properties, I have a little bit of experience related to what we have in place. Okay, homeowners insurance or some sort of primary residence policy. If you're an investor, it's not for you. You're not living in that property. Do not get that policy because if something happens, chances are it will not be covered and you're just throwing money down the drain. A tenant-owned policy or a tenant-occupied policy is if you have a rental property and you have a tenant in there, that's the type of policy that you get. Just make sure you're getting it only after the tenant moves into the property. A vacant policy, probably one of the most expensive policies that these insurance brokers write. I guess just because there's signs of theft and other things if the property is vacant, but only get it if the property is vacant. The most common one in our business is builder's risk with liability. And what that means is it's a builder's risk insurance policy. It covers, theft of construction stuff on the property, building materials, things like that, and obviously hazard insurance if the property burns down. And there's a liability component if somebody slips and falls or contractor gets hurt or something on the policy. You do need to make sure that you have the right coverage and the right policy for your particular property and the phase of the property, if it's under construction, if it's vacant, or if it's occupied. And I will tell you from experience that if you have the wrong policy in place, chances are they will not cover it. We have a lot of borrowers that come to us on a regular basis and they get a tenant-owned policy because they say, oh, well, it's just a little bit of construction, then a tenant's going to move in, and a tenant-owned policy happens to be a lot cheaper. A primary residence policy happens to be a lot cheaper than a builder's risk and liability. But for the few extra $100 for the year that it costs for the builder's risk policy, you have to get that because it is the only thing that's going to cover you if something happens, right? Insurance is insurance. It's necessary. Make sure you are getting the right policies. I can't emphasize that enough. I've seen so many times that the borrower is not getting the right policy in place and it is not covered when damage happens. So spend the money, make sure you get the right one, hook up and get the right insurance provider. As you grow and do more and more properties, it becomes cheaper. Then you get some sort of commercial line, things like that. Cool? If you have any questions, comment below. Happy to share some resources for insurance companies and help you on your next real estate deal. Thanks again. This is Jason with your Private Money Minute.